Hello, everybody. Welcome back. It is a very special time right now and a very unique time. For the first time in a long time, I can confidently say Starbucks and Target are officially back. The Becky stocks are booming once again. I did not anticipate that a single month both Target and Starbucks would go above over 10% in a day. It's absolutely a special thing. I've gone quickly from negative into the positions into positive gains. Target's actually a company in my portfolio that has been kind of one of those holdings that I've just let kind of do its own thing. I haven't been paying a crazy amount of attention to it. It currently makes up about 5% of the portfolio right now. So today I'll be discussing Target earnings, what I plan to do with the position, and so much more. And since I am the chosen one, the greatest investor of all time at this point with Starbucks and Target, that's a joke by the way, consider becoming a channel member today and supporting what I'm doing over here on the channel. And thank you to my current channel members, SoFi Boy Major Speed, Redwood, and Jacob. I appreciate you guys so much. On to the video.
Hello, I like money.
So before I go deep into the earnings here, I want to kind of share my base thesis on Target updated at this point. So I think at this point, Target has already gone past the effects of Amazon, where that's kind of broken down some other retailers. Obviously, retailers had the last couple of years been really rough for them. Companies like Walgreens, CVS, and Rite Aid really struggling. But right now, companies like Target and Walmart, I think, are past that. I think that at this point, Target offers a really unique retail experience with Ulta Beauty, the Starbucks inside their locations. They have a new rewards program that Brian Cornell's been working on. I think right now, Target is a solid business. But with that said, I want to make this very clear. I am looking to sell out of this company at some point. I think I can do better, but at this price, it doesn't make sense for me to. There's just limited growth ahead of it, and I think I have a lot better options. And I'm going to share what I plan to do, when I plan to sell out, and what I plan to put the money into at the end of the video. But right now, I'm very happy with the stuff that they're doing. I also think that a large part of your return on this company is going to come from getting in at a good time. And I was blessed enough about a year ago to be buying this company at $105. But I think right now, Target is creating a unique retail experience compared to other retailers. Every Friday night, a bunch of middle school, high school, and college girls will often flock to their local Targets, just to linger around, loiter, get some Starbucks, shop. You know the deal. Those girls certainly aren't going to Walgreens or CVS these days. Target said in their earnings report, though, that their sales grew about 3% in the fiscal second quarter and a return to growth after a prolonged stretch of sluggish sales, mainly due to their inventory mismanagement and theft issues they've been dealing with since 2022, basically. Target beat both earnings per share and revenue estimates. The earnings per share was the bigger beat for them. Target also raised its profit guidance from $9 EPS to $9.70, with a previous range of $8 to $60 to $9.60, so very positive stuff seeing here. Target COO Michael Fideliki, I hope I said that right, said Target took a measured approach with an outlook because it's hard to predict consumers' mindsets with the current state of the economy. So to be honest, we're going into a blind storm here. He also said that while we're pleased with our performance so far this year and our view of the consumer remains largely the same, the range of possibilities in the macroeconomic backdrop in consumer data and our business remains unusually high. So they're looking very optimistic for the next few years. Target came in with much better earnings per share, as I mentioned, of $2.57 versus $2.18 expected, so a big beat there, and a slight revenue beat, which is positive to see, at $25.45 billion. Target basically cut a lot of their prices this year, even with inflation, something that I hope another company in my portfolio, Starbucks, does. The hope is to get more volume inside the stores and sales right now to basically make up for high prices and lower people coming into stores. It's a win-win situation. Target has more people coming into their stores and hopefully more revenue at the end of the day, and the consumer gets lower prices. So it's a win-win for all. And hopefully this is a continued trend with other companies and other stocks, more specifically in my portfolio. Target's net income jumped to $1.19 billion or $2.57 earnings per share from $835 million in the year-over-year quarter, which is more than a 40% year-over-year increase. Absolutely insane. This is the first time in 5 quarters that Target has posted a gain. Digital sales drove a lot of those gains, growing 8.7% in the last quarter. More customers are using same-day services like curbside delivery and home delivery. I think it's interesting right now that even in an Amazon era, Target is still competing and doing well in their own online business. I'm kind of in a weird situation now, as I am an Amazon shareholder and I roughly own the same amount of Amazon as I do Target, and I think Amazon just does it better and they're not as reliant on the retail as Target honestly is. Target's kind of like the Avengers, but at the end of the day, Amazon is like Thanos. It's just overpowered. Brian Cornell, the CEO, who I'm very fond of, I think he's a quality CEO, and I said it on Twitter repeatedly, said customers have responded well to the price reductions and credited them for contributing to growth traffic this quarter. Consumer traffic across Target's website and store grew 3% in the second quarter compared to the year ago period. The average size of orders has gone down though year over year. But interestingly, discretionary sales, which makes up a lot of Target's profitable items, have gone up 3% year over year. So very interesting. Very unique time for Target. Something that also is really interesting is the positive momentum that Target right now is seeing when it comes to the theft issue that they've been dealing with. This is an issue for all retailers. A lot of companies in retail got killed by this. Companies like Walgreens, CVS, those kind of low quality retailers almost, they got absolutely beat up. They just can't afford to really compete with these, organized theft rings. Target is more collaborating now with police officers and expanding their locked cases. Now, as a consumer, you go into a Target now and you see a lot of locked up stuff. I mean, as a shareholder, it's nice to see, but as a consumer, it's really annoying sometimes. And I hope that this is not a prolonged issue. I think it's absolutely a society issue, and I hope that whoever gets elected in November takes a more direct approach to this. It's still an ongoing battle, but Target is absolutely making some positive moves right now and collaborating with local and federal law enforcement. So, positive to see, but we absolutely do need some government officials here, from local to Senate to Congress to presidential, to work in a bipartisan way because it absolutely kills all classes involved here. No, it is not the big rich people that are hurting from this. It's shareholders and the middle class shareholders that own Target stock that are really getting beat up. But unfortunately, some people in Congress like to make the excuse that some of these thieves are just good people looking to get some bread for their families. So overall, a relatively good quarter for Target. They're up about 12% today so far, and hopefully this momentum continues. Now, I mentioned at the beginning of the video that I would consider selling out of this company, but it has to be at the right price. I'm fine with being patient, but it's obvious at my age that I think Target's a company that has limited growth ahead of it. It's not the best I think I can do in my portfolio, and I'm more likely than not, if I'm going to sell it, probably from the $180 to $200 range if this momentum continues. But anything can happen with the business. If Target announces they have some crazy new growth plans in place, I'm happy to hold on and maybe raise my price target a little more. I'm fine with being patient in this current market. Now, if I were to actually buy to Target, it'd probably have to hit 120 again. I think it really does matter at this time. Retail is very cyclical. Over time, hopefully, the trend is that it goes up, but it does matter when you get in. It's, as I mentioned, guys, there's a lot of issues that, you're investing in with retail. There's a lot of problems that are going to face you as an investor, and you got to have the stomach to kind of, wince through it. I think 105 was an amazing opportunity to get into Target, and I'm happy I bought there, and I'm currently up about like 12-13% on the position. I was about flat the other day. But just investing in a company like Target, it 100% matters what time you get in. Long term, I think it's going to do fine, but it matters when you get in, and ideally for somebody like me, you want growth positions that, it doesn't matter what valuation you really get in. Over the long picture, you're going to get a market-beating return, or even better yet, just buy an index fund or ETF. So, I mean, more likely than not, I wouldn't sell my entire Target position if it got to 180. I'd probably start trimming it, but if it definitely got to like 200, 210 again somehow, hopefully, knock on wood, where we may have wood, hopefully I would be able to get out then. And then, once again, there's nothing holding me back. If the stock goes down, I'd be happy to buy more. That's the plan with Costco. Eventually, the market will correct, maybe hopefully way below under its cash flows, and you can buy more at a discounted price. But if I were to sell my Target, I would more likely than not just put it into SHG or an ETF, something that's more hands-off. That's kind of the approach I've been taking more these days. I think I'm going to get a better return with SHG over the long term. But that's more likely than I would do with the money if I were to sell. I hope you guys appreciate that transparency. I haven't made a Target video in a while, so I hope you appreciate the update. Smash the like button, subscribe, and do dividend stocks, not drugs. Have a good one.